Hi everyone. I know this rain was unexpected, but I have to thank you for not only coming out, but for investing in yourself. Right? Time is your best investment. And that is where I find that value lies. So I'm gonna quickly grab this. I don't think I need the mic, right? You can hear me well? Yeah. Okay. Perfect. So as you're viewing the room floor, just let me know quickly what industry you're starting.
Federal contract.
Okay.
Construction project hiring. Grant.
Awesome. All right, and then as she mentioned, I specialize in financial statements and reporting. I'm a CPA that specializes in that space. I started my business focusing on financial literacy, and now I support entrepreneurs as well. So I would like to start with a hand raiser. So this is data from Forbes that says the small business failure rate 5 years. So we see that 20% of businesses fail around that 1 year mark. 2 year mark, we see about 30% and 50% around that 5 years. And so the reason why I start this is I think it's very important for us to have that in mind because we've all found purpose and passion when we started our businesses, or even if you're thinking about starting a business, right? You feel this calling to do so. And when we have these numbers, we want to make sure that we're not sitting in that group. And from all of these percentages and all of these entrepreneurs that struggle with their businesses, 30% of it is because of cash flow management. So managing your cash in your business is very important. We're going to be talking about that today. And that's different than bookkeeping. We're going to go over bookkeeping as well, but managing your cash is equally as important. When you pair those two things together, it is a game changer for your business. Okay. And so again, some background on myself. I'm Aitzarelys Negrón. I'm Puerto Rican by background. I'm a money coach and profit strategist and focus a lot on aligned finances. I want people to align their finances with things that make them happy, with their joy, with their purpose, and really remove this fear that we have around money and this hold it has on our life. It's really a tool that's meant to be used so that you can pay someone to live out their purpose and thus you have the time to live out your purpose. I have 10 plus years in accounting and finance, starting in investment banking, going all the way to being an external auditor, then working in advisory for acquisitions and in financial reporting, and then coaching. So I do support individuals and entrepreneurs as well. Here are some organizations that I've worked with. Hopefully you may have already attended one of their workshops as well if you're in the Miami area. And the reason why I do this work is I'm a child of an entrepreneur. So I know firsthand what it looks like when the finances aren't well managed, when you're living paycheck to paycheck. Even as an entrepreneur, 80% of entrepreneurs are living paycheck to paycheck. And so because of this and my upbringing, I really wanted to make sure that this calling again that you have in your heart is done from a place of fulfillment and not a place of stress. So this is why I'm very passionate about this work. And again, I'm happy that you invested in yourself and you can. Now, what are you going to have by the end of this workshop? So by the end of today's session, you're going to understand. So you're going to understand why accounting is important in the first place, and you're going to understand what are the primary financial reports. I overheard a few conversations earlier. Some of you are open grant, and depending on the amount that you get in these grants, they're going to ask you not only for your profit and loss, not only for your balance sheet, but they're going to ask you, well, what are your projections? What are your cash flow? I'm going to pause here and say, how many of you have heard, write it all off now that I'm not an entrepreneur for taxes, so that I don't want to pay taxes? No. Have you heard that? That's it. Okay, a lot of business owners, they write things off with the thing that they're told a lot, but what happens? Yes, you can write things off because you're not a business owner, but when you go to apply for that loan to scale your business, or you go to apply for that grant, they might say, well, why would we give you money? You don't manage money, you don't have anything here. So it's time to start changing and shifting that thought process, right? It's all about a mindset shift. The next thing you're going to understand how to do is to organize. So this is the actual process of maintaining your books and managing your cash flow. For those of you who just joined, you saw that I mentioned 38% of business owners fail because of poor cash flow management. You're going to learn how to implement a structure of your financials. I'm going to walk through QuickBooks, and I also put together a Google Sheet, a balance sheet, and profit and loss statement for those of you who are not yet using QuickBooks software. And I'm going to walk you through how to analyze those financial statements, because the analyzing is key. It's not just about doing your books and categorizing your expenses, but it's about understanding how to review those numbers so that you can make decisions in your business. Are you ready to hire additional help? Or is your marketing investment that you're doing actually paying off? You've seen increased revenue because you're spending more in marketing and ads. So this analyzing portion is really important to understand the money story of your business. With all of our money shows us the story. You can't hide the numbers. Now, understanding the why. Let's go on to what are the key reasons why accounting is important in your business, and then we'll dive into the financial report. So the importance of accounting. I'm going to pause before I fill in the circle. Does anyone want to throw out any ideas of why it's important to understand the numbers and the accounting in your business? Profitability.
Stay in business.
Staying in business, okay,
Are you earning, are you losing?
okay,
Avoiding issues with IRS.
all right. Awesome. So the first one, informed decision making, right? We just talked about this is gonna allow you to make those decisions in your business. Are you ready to hire? Or maybe, I've had clients where they realize that we put their books together and we cleaned everything up. They actually were paying themselves way too much. And that's why they were coming up short for their payroll for their own employees, right? So these are the types of things that come up. The next thing is that cash flow management, right? Are you profitable? Is there cash? You might go see your tax at the end of the year and say, you owe taxes because you were so profitable. And then you look at the bank and you're like, where's the money? I don't see it. So that's why cash flow management is important. Then profitability tracking. How are you tracking? Understanding how to look at your reports monthly across the year so you can see what are your most profitable seasons in your business, if your business is more seasonal, or what you can do in those times that it's a bit slower. Access to capital, we mentioned this, you're ready to scale, you're ready to start applying for finances, getting the access to capital, you're gonna need these reports. Budgeting and forecasting, this is where you're now taking your data, you're planning how you plan to use your money, and you're also forecasting what your numbers are gonna look like down the road, a year out, 2 years out. This will be great if you're, again, thinking of doing a large purchase and you wanna get a storefront, build your own building. The forecasting will help there. Tax compliance, which you mentioned, or making sure that you're ready for tax season. Tax season and tax filing time is between March through April, but tax planning actually happens way before that. You should be already planning for this full year. You should be meeting with a tax expert that's allowing you to strategically prepare. How can you best maneuver? How can you, really prepare yourself for that tax filing time? So I really want to highlight the difference between tax filing and tax planning. And ultimately, it gives you peace of mind. When you understand your numbers, you are going to sleep better at night. You're going to feel a lot calmer because you know what's going on. Just because you have an accountant, that accountant should be giving you information. You should be able to ask them, well, what does this mean? What does this say? When you're doing your taxes, you actually sign. When you sign that return, you're saying that you know what's in that return, that you told that tax department what they put in that return. So it's really important for you to have that understanding and really work hand in hand if you're not doing it yourself with someone that could really be a trusted advisor for you in your business. And now I'm a visual learner, so I like to use this image when I talk about the 3 key financial statements. So what you'll see here is we have the rain, this is the cash flow, right? This is money coming into your business, really fueling the business. Then you have the tree trunk, I like to compare it to the balance sheet. So when you cut a tree, it has different rings in it, and those rings tell you the age of the business. So every ring is a point in time. Your balance sheet is at a point in time. The data that's on that report, we're gonna dive into it deeper, is showing if we run it today, it'll be as of today. The profit and loss, we have the leaves falling, because as the leaves turn green and the trees look beautiful, they always fall at the end of the season. Your profit and loss is telling you data about your business over a period of time. So it's showing you what's going on between 2 days. So hence the leaves. Does have anyone familiar with any of these reports, or this is the first time anyone seeing them? Okay, perfect. Now, let's go into the profit and loss. So the profit and loss has 3 different account types listed. You'll have your income account. So this is where you're operating your financial benefits of the business, all your gains coming in. So this could look like your product sales if you're a product-based business, and also income from your services. Then you have cost of goods sold. So this is different than your expenses. Cost of goods sold is directly related to the service or the product that you are putting together. So if you are, let's say you are a landscaper, you have teams that are, going out there doing the landscaping work for you, they're paid to be cost of goods sold. You need those workers so that you can provide your service. That's different from your admin. Your admin cost will be under an expense because that person is directly, they're doing other things, not exactly the service. And this is where if you're making products, you can actually start looking at this data. Is it making sense how much I'm charging versus how much it's costing me to make this product? And then we have our operating expenses. So again, this is a bit different than cost of goods sold. Now these are costs that you're spending to operate the business. So your overall marketing, any business license you're spending, rent, your utilities, supplies. So this is to run your business as a whole, but not exactly to complete your specific service or complete your specific project. Any questions on this part? And now I know, okay. Let me know, I'll read the numbers because they're small, but this is the first half of a profit and loss statement. So I want you to think, or if you can see, if not, I can read it out, but what is the main income stream of this particular business, the landscaping business?
Materials.
Landscape.
Yes, the landscaping service,
Yeah, that,
right? So landscaping service, those can see is 2,700 compared to everything else. Now, you might see, and if you've already been managing their books, maybe you just have one line that says services. I would invite you to consider expanding on that. The reason why is if you just have services, but you have two different types of business. So here, you see that this company, they have design, right? The income that they're trying to design the landscaping. They actually have the landscaping services themselves, but they also provide pest control service, right? And they have some additional product income. When you have it all bunched together in one line, you can't analyze the data. You can't see what service am I providing is driving my business versus the other. So when you start to break it up, you start to get into some more clarity and some more details about how you can really make those pivots you need in your business. Let's say you have two services or two products, and product A is doing very well, and product B is not. But then you look at how you're spending your money and you realize, I'm spending a lot of money on product B. What would happen if I maybe slow down on product B and push some of those marketing dollars towards product A, which is already bringing in a lot of money? Right, so these are the things I want you to think about on how you can start to analyze data when you're looking at your numbers. Now, from gross profit perspective, how much money has this business made to date? This is before expense. This is just looking at all the money that's coming in. Okay, 48, yep, 48, perfect. So you have that here. And you'll see that this is showing a period of time where the profit and loss is like those leaves on the tree, so January through December. Now, here it's very small, so I'll answer it for the group. But what should anything else be classified as cost of goods sold or cost of services? As I mentioned, when you look at your profit and loss, you have your income. Underneath that, you have cost of goods sold, these are the costs that relate directly to the product or service you're providing. Underneath that section, you will have just your overall expenses. So here, they have job expenses, so job materials, decks and patios, plants and soil, sprinklers and drip system. They're a landscaping company. So this group, I would recommend, like, if this was my client, they should be having this under cost of goods sold. Because these are directly tied to the business that they are providing and the service that they are providing. And then the last one, does this business have a profit or loss? They have a loss. Right? So all of this, again, it's a math problem. So you take all the data at the very end, it'll tell you if it's a profit or loss. Usual systems will always say net income, even if it's a loss, the system will adjust to say net loss, but you'll know it's a loss because it's negative. So something to keep in mind. Unless you're doing it yourself and you're maybe using a template on a spreadsheet, you can adjust that header if you want. And now the balance sheet. So again, this is like the trunk of a tree. It's telling you the numbers that you have at a point in time. This also has 3 different account types. The first types of accounts on your balance sheet are your assets. These are things that your business owns or controls that add value to the business. So this looks like the cash that you have in your bank, any equipment that you own, any inventory. You then have your liability section. This is who you owe, what you owe to other people. So you have loans, you can have your credit card balances on here, any unpaid bills might be on here depending on how you're reporting your accounting. And so what I want to highlight is you might have a loan, and then that loan is also sitting in your assets because you received the cash. So you'll show both sides on your balance sheet. You'll show how much you owe and the cash dollars. And then you have the equity. So this is what have the owners invested in the business, and then plus retained earnings, which is coming in from your profit and loss statement. So here you have owner's contributions, owner's distributions, it's separate from payroll, if you're on payroll for your business. And then also those retained earnings. Now, I do wanna mention something, because I had a question from a prospect recently, can I get my business a loan? You could. You can say, I'm putting money into my business as a loan to my business, but I do plan to pay myself back. So I just wanted to answer that, because that was something that came up yesterday in a conversation with a client, prospect. Now, again, what do you see? What is making up the most of this landscaping company's total asset? And also those house, the trucks. So their fixed asset, that truck is almost, it's 13,000 or 95, right? So the majority of their asset is sitting in this truck. Yeah, put a little trick in there, people usually look for the cash. And do they have any loans? Are you just gonna say yes?
Yes.
Yes. Right, so they have two loans, they have a loan payable here, under current liabilities are usually items that are owed within 12 months or less. And then in the long-term liability, they also have the notes payable, this business has two different loans.
So, I'm sorry, SBA loan, remember those loans that they gave for the pandemic?
Yeah.
Would that mean on the long-term loans, the liability?
If they're due in longer than 12 months, then yes. So what would happen is, let's say you had a loan that was out for 5 years, it'll be sitting in that long-term liability section. When year 5 comes in, let's say now it's due in November, you would actually move that to current liabilities. So that would be an adjustment that you or your account will do. And now, the assets equal liabilities and equity. So a balance sheet, think about a balance, it has to equal. So whatever you have in your total assets should equal your total liability. Depending on how you file for your taxes, you may be required to file a balance sheet with your tax return, or your tax preparer will have to do that. Make sure that they walk you through these numbers. I had a new client who they had a tax return to do their taxes. The balance sheet did not balance. And I was able to flag that. They had to go back and file an amendment with that person. So again, you're signing that you understand the numbers, so make sure that you're looking at them. And I'll pause here. Does anyone have any questions on this perspective? Now, the statement of cash flows, remember, this is the rain. This is that money coming in, really fueling the business. So account types in your cash flow, you're going to have operating activity. So this is cash generated or used in your day-to-day business operations. So customer payments, vendor payments, salaries, rent, and utilities. So you're going to have money coming in and out in this space. You have your investing activity section. So this is money and cash that's being used to buy or sell your long-term assets. Just notice that one of the biggest assets for the landscaping company was that truck. So that truck will sit in investing activities when they're buying it, and of course they're selling it. And then you have your financing activities. So this is any funding through loans, through you contributing to your business. So taking out a loan, your owner contributions, your distributions, loan repayments, they will all be sitting in this section of the cash flow. Now, here, and I said, you see, how much did the truck cost to this? And it's the same, it's not. So, right, so the cost is the same. And how much cash did they use during this period of time? It's towards the bottom.
Yes, 5,000.
Yeah, that's 936. That they use. Under the net cash increase for the period, it's a negative because they use funds. So this is how, again, that math fund all comes together, and then it shows how much was used or made in the period, and then it'll show you what was the cash at the beginning. So they started off with 5,000, they ended with 4,063.
What's the MasterCard? Meaning of their cash flow?
So this is what they were spending on their credit card,
Oh, okay.
that cash payment. of funding.
Does it like cash carrying may use the drop, something like that, what's the connection?
So the cash flow, what it shows is the money moving in and out. So when they're making payments, that shows up on there, when they're receiving cash, it's kind of just tracking how the cash was used in the business. Normally, I'll see clients, definitely the P&L and the profit and loss, but it's good to understand its cash flow statement in the case that you are asked for it, or you just want to see how am I using the money in my business. Now, moving on to organizing your finances with purpose, right? Use the process how to maintain your books and how to manage your cash. Now, I mentioned at the beginning that a cash flow strategy or a banking strategy is different from bookkeeping, but when you pair those two together, it could be great. So I always recommend that you have both, right? Your banking strategy is how you're allocating your income into purpose-driven accounts, right? And I'm going to walk through an example of what that means. It helps you control your spending. It helps you understand and prioritize how you want to use the money in your business and be best prepared for things that are going to happen in our business. And traditional bookkeeping, now this is tracking your income, what services were driving that income, what are your expenses. It's more tracking what has happened in your business so that you can run those reports. So we just went over the profit and loss, the balance sheet, and your cash flow. Now, cash flow management, I'm going to start here. So I have it grayed out because this is the past. This is how you maybe have been looking at money before today, and we're looking to shift that. So you'll see the first one, we have our existing operating account. So you see a bank symbol. Wherever you see a bank symbol, that means it's a bank account for the next series of something. And so usually what we say is the money comes into the business, we pay all of the expenses in our business, and there's profit at the end. Maybe there's not because you spent the money. So you say, well, next week, next month, I'll focus on profit in the business. This might be similar, and I like to do a connection with money and mindset and how we view our personal finances ties into how we run our business. Very similar to life. We receive money in our personal life, we spend it. What's left for me to save or invest? Oh, nothing. I'm gonna do it next month. But I'm inviting you to think differently about this, and it's about shifting the formula. So you may have heard of the profit first method or cash flow strategies. This is really walking you through that. So when you're shifting this perspective, you're saying, I have my money coming into my business, but first I'm going to set a little bit aside for profit. I want you to start getting into the habit of paying yourself first. This is how you avoid starting to resent your business. I'm working so hard, but I'm not seeing the fruits of this. Why did I go down this journey? And then you pay your expenses from what's left. Right? And it's not just going tomorrow and changing this, but it's really starting to shift how you're viewing the finances in your business. And I like to pair it with the banking strategy because I feel that it allows you to streamline it and it gives you a bit more ease of mind. So this next account that you're going to have, remember the bank symbol means it's a bank account. You're going to keep that operating account that you probably already have. And if you don't have a separate account for your business, please open those as soon as possible and limit how much you're co-mingling, which means mixing your personal funds with your business. If you have a registered business, it's not for tax purposes, it's actually for a legal protection. It's saying that your business is separate from yourself. When you start mixing your personal funds and your business, and someone says they're going to sue you, you do what's called piercing the corporate veil. Now they can sue your business and they can sue you for your personal assets because they can say, well, we don't know what belongs to the business and what doesn't. It was very important to keep this separate from your personal account. So, sorry, that was a little side trip I went on, but it's important. Now, the next account you're going to open is one for your profit. Again, getting into this habit of paying yourself first. You then want to have another account for taxes because not all the money that you receive in your business is for you or for your employees or for your expenses. Part of it, we have to pay. We have to pay taxes. When you're paying taxes, that means you are making money. People that make money pay taxes. They might pay less taxes so they have a tax strategy and they're using tax planning, but they're making money. So it's a good thing. But we want to prepare for it because we know what's going to happen at the end of the year. And or quarterly if you're required to file quarterly based on your business. The fourth account you want to have is your owner's pay. This is for you. This is to pay yourself for the work that you're doing in your business. And this is separate from profit. I want you to think about your profit, that's like the Christmas bonus. This is the extra. Your owner's pay, this is your salary for working in the business. And then you have operating expenses. this next account is to cover all of your other costs of your business. Some business owners will have an additional account if they want to have payroll in its own account. Some business owners decide to add more if they want to, they're investing in something in their business, they plan to, again, build a building, buy a truck, so they'll maybe open another account, they'll keep that money separate. I tithe my business revenue, so I have another account for that, right? So really make this yours. What matters to you as a business owner? What are your values? Because that's why you probably started your business in the first place. Go ahead.
In my case, I have a Bank of America business account and a personal.
Okay.
I charge all the money comes to the business account. From that, I take for like a food, my expenses in my personal account.
Yeah.
You are saying that, for example, I should go to Bank of America and open 2 more accounts, one for taxes and one for
Operating expenses.
operating expenses. And again, all the money comes for the business, and from there I have to pay, I put on the code, what I take to the taxes, what I take to the operating expenses, to owner's pay.
Yep, we're gonna walk through that.
We're going to go through that.
Yeah, and I also want when you're implementing the strategy, be mindful of your bank institution. I'm not sure what the Bank of America minimums are, but certain banks have minimums on each account, so if you have an account with them, you need to keep. I know for Chase, for example, as of today, it's $2,000, or they'll charge you a monthly fee. So this might mean you have to strategically bank by moving to a different bank, right? I have Chase personally, because sometimes I access to Zelle. But I also have another bank that doesn't charge minimums, doesn't charge fees, right? So if you're gonna implement this, keep that in mind. Because now we don't wanna open bank accounts and then we're not hitting the minimums and now we increase our expenses in our business. What?
I think, in the, just an adding to what you were telling, what is I totally understand now, because if you go to the Chase Bank and open a bank account, so they give me a primary account and then they give additional 4 accounts with no cost.
Okay, so
Under the same account number, they have 1, 2, 3, 4 accounts.
so that's good as long as you can transfer in between.
Yes.
So if you can view, okay, so that's perfect. So I didn't know that they had that feature, so
I
that would be
did-
great.
Yeah, I didn't understand why they gave, I said no, when they offered me, I
Yeah.
said no. But no additional cost, there is no separate fee for the meaning minimum thing and all. So you keep the minimum in your main account
Okay,
and they are not even they may give us some 1, 2, 3, 4 number.
okay, so
Say-
they kind of sum them all.
Yeah.
Okay, perfect, so in that case, then we can use Chase. I mean, you can use any bank you want, and that's why
I don't chase that's one of my,
Yeah, I personally like Chase, but do this research, right, so that you can understand, does it make sense? And maybe it's time to shift your bank, right, so try a new bank so that it works best for you. Now, I'm gonna quickly walk through what you were asking of how that money will flow. So here, let's say you have $15,000 of revenue that's entering your existing operating account or your revenue account. Right? I like to I have an automation set up, so in my business, I have it run every Friday. So what happens is that this $15,000 is going to enter your account, right? You have 5 or 10 clients, people are paying you, etc. It'll all go into this account, 100% of the money. Then you're going to have an allocation. So we have our splits here. Good, okay. So what happens is that 15,000 will now be divided based on percentages to your other account. Right, we have 5% going into the profit, 15% going into taxes. I always say, put that 15% within taxes. Owners pay 50%, operating expenses 30%. Now, this operating account, that first account will now be 0. It's going to turn into a 0 balance because all of that money has now moved into your different buckets. Why is this helpful? Because let's say you wanted to buy a machine for your business that was $7,000, that $15,000. I'm going to buy this machine at $7,000. But if we see, we really only have $4,500 in the account because we've already divided and allocated our funds elsewhere. Now, these percentages, these could be a target goal, and I'm going to show some target goals on the next screen. And again, this is from that profit first methodology. But you might not have these percentages right now because maybe the expenses of your business are 60%. So if you just put 30%, what's going to happen? You're going to overdraft. You're not going to have enough money. So again, getting your financials in order, getting your books in order, then you do an analysis. You look at your profit and loss, and you see, okay, I see this money coming in. We already know money coming in is 100%. but where is my money going? How am I spending it? And then you will calculate that percentage and say, as of right now, this is the percentage of my business. And then you will start to shift your allocations little by little. I say every quarter, you review your financials. You should review it every month, but for this purpose, review it quarterly and then you shift the percentages. But I always recommend 15% of taxes, and for that profit, even 1%, because we want to get into the habit of prioritizing ourselves and putting that profit set aside. Okay. Now, these are caps, so these are suggested allocation percentages based on your revenue of your business. So if you're sitting at between 0 to 250,000, the example I showed will be the percent that they recommend. Again, if you decide to add an extra account, as I mentioned, I tithe for my business, so I have 10% going into that account. I've adjusted my percentages to reflect that. So again, make it something that works for you and build over time. I'm also not suggesting that you close your main operating account. Let's say you do decide to move banks and start this process right away. I say, build out the strategy, keep your main account, and then you might have to start calling places to change automatic payments to your new expense account, right? Make adjustments there. Keep that main account for at least those 3 months just to see what comes out of it. And then at that point, if you feel comfortable, you can do that full transfer if you decide to split it. So for example, in my business, I did go into a new financial institution, but I also do have an Airbnb business. I kept the main, what used to be revenue, I turned it into my expenses account and then I created a new revenue account. Because it was easier for me to change where the money's coming in from versus where the money's coming out of. So that's just my approach. And I'm happy to connect after if you have any questions about it. Now we're gonna dive into that bookkeeping piece. So as I mentioned, the cash flow management is one thing, the bookkeeping is different, but both are equally important. So we have that manual approach, right? So you'll see there's a shoebox, maybe you're keeping all your receipts in a shoebox, maybe you're using a spreadsheet, maybe you're physically writing things down and keeping track. So I'm going to walk through this QR code you can scan, and this is going to show you a template that you can download with Google Sheets. So you don't need to have Excel. I'm sure why there's this second pop-up here, but you don't need to have Excel to use this, and you can fill in your profit and loss and your balance sheet. So the first thing is when you'll be requested to make a copy of this spreadsheet. Oh. Okay, I'll walk through until it pops up. But you'll have to make a copy of this spreadsheet, then you can make any edits to it. The first tab will be that profit and loss statement. So there you're going to see similar categories. I added some fields that say other, where you can type things in to add additional expenses, or you can always remove expenses, and it's formula driven. For this portion, I actually added columns by month so that you can take your bank statement. So if you're doing this manually and you're filling out the spreadsheet, perfect. You can actually grab your bank statement. Okay, you can grab your bank statement while the page is loading. Okay, there you go. So you'll see that I have lines for income. I put services 1 or 2. You can add additional services if you want. Wherever you see a calculation or a $sign with zeros, that's all formula driven. So you don't need to make changes there. It will calculate the numbers for you. And at the very end, it will have totals. So if we go here, these will also calculate as well, so you can see what the total is so far, because as I mentioned, the profit and loss is over a period of time. Now, why I did this monthly? Because I personally like to review my P&L monthly. It allows me to see what are the seasons of my business. When am I bringing in the most money? What are my slow seasons? Because what happens during the slow seasons? I need to manage my cash, because maybe my expenses, I still have to pay them, right? So I think viewing it monthly and getting into that habit of really scheduling a money date with yourself will be helpful, right? As you're learning your numbers and understanding the story that your numbers are telling you in your business. So what you would do, or what I would recommend that you do, is for the expenses, I would definitely start to track them. This is definitely great if you don't have a lot of activity in your business. Take out your bank statement whenever you receive it. Have multiple different colored highlighters and highlight. Green highlighter, any money coming in. Right? Yellow highlighter could be different types of expenses, etc. Mark them down, calculate the total, and then you plug the total in here.
And you'll see I already added a few lines at the bottom for different types of expenses. For auto, I put other because maybe you have a business, a car that's registered for your business, you want to add those fees. Bank charges, credit card interest, right? We want to track that. If you're getting any other bank fees, we want to track that. Dues and subscriptions, etc. And when we go into the analyzing, I'll be doing a demo of QuickBooks. What's important to see this monthly too is you can start to spot quickly if something looks unusual. Which means, let's say you, for example, you have a dues and subscription, it's $100 every month. Then 1 month, it's $500. When you're busy, you're managing your business, you're out there selling, you're making connections. You might not realize it because you're not looking at your numbers. But when you get into the habit of looking at your numbers, you'll be able to spot that very quickly and see what happened here. Oh, I forgot that I have an annual item that bills me annually. That's why I went from 100 to 600 this month. Right? You might see that there's an error. Companies make mistakes. Maybe they charge you twice. You want to understand. Or they increase their fees. Last year, I took a deep dive into all the tech in my business. And I was able to save almost $700 just by switching the company that I used to sign electronic documents to a different one. Because without noticing it, every year they were raising their fee and raising their fee. And next thing you know, it's $80 a month just to electronically sign a document. And I was able to change to another one for $20 a month. Right? So these are the things and the decisions you can start making when you understand your numbers and you start analyzing that. I also included in here for you as well. It opens a balance sheet template. It's going to look a bit different than kind of the standard, which you'll see later. But the reason why is because I wanted to include these ratios for you. So at the bottom, there's some common financial ratios that you should know in your business, which are basically calculations. So you have your debt ratio. This is showing you how much debt do you have. What's your percentage of debt in your business compared to all of your assets? Your current ratio. So what do you have current cash versus liabilities in your business? Working capital, assets to equity. So what are your assets and your debt to equity as well? So I just threw in these additional calculations for you. And it's all formula driven, so they will auto calculate. And on the template, you'll have my email. So if you have any questions while you're working through, if you decide to use that route, you can feel free to reach out to me. Thank you. Have some water. Any questions?
Yeah. For beginning, the expense rate, I put everything that I pay, personal or business, or just business.
Only business.
Only business.
Yeah.
And so I can have another copy for person.
If you want to track, your personal spending, you can make a copy of that. You change the categories to track your personal spending. And I think that is important. As I mentioned, I started my business with personal finance. Right, learning how to manage your money is key, both in your personal life and in your business. So you can definitely use that, adjust it a little bit for your personal. Any other questions?
I already got the shades several times because I tried to do this or having all the account tools. Like have an account to pay the teachers, for example. And I went to our the bank, and it didn't work because when I was paying to sell, they would charge me a percentage of that, even if they don't pay, if they don't charge like a monthly fee.
For example?
Yeah,
Okay.
that's why it didn't work. I had to close the account.
Yeah.
Then I was like, what is the best plan for a person like me, small business to use to do this? Because Bank of America charged me almost $30 a month for the business account.
Yeah.
If I have to open, they have more than the business account, there's a problem.
There were some questions asked because sometimes, so you open the main account and what she says, well, like, you guys go over there, open a savings account or whatever, and then you could mix it in and as long as you have the, for that, they don't charge you at all. So you have to ask. Like,
Yeah, but I think I'm going to leave Bank of America. I'm going to go to Chase.
Yeah.
It's gonna be the same thing. You have to have a certain amount of money or otherwise they're gonna charge you.
Yeah, I can pay the
service
$30, but I will ask if I can have those 4 accounts. In a way that I can pay them all, the accounts.
Yeah, there's different rates. I use Relay Financial, so happy to share that with you all after. But they're actually, the partners of Profit First, you can have up to 20 accounts, I don't recommend that you have 20 accounts. But I do like that they lead to savings accounts, so my profit account and the tax account sit in a savings account, and they're saving. So there are different banks that you can use. As mentioned, I personally like Chase, that they do a lot of programming for small businesses. They do have that minimum, I just keep the minimum in the account, and they offer sell for business, so, you know, find what works for you. You are not tied to any bank just because they've been your bank for X number of years. Right? Banks move strategically with their money. You put money in the bank, they use that money, they give out loans, they give out auto loans, they charge interest, they give you, so. Be strategic, what makes sense? Is the bank somewhere where I can go and see someone, right? You do wanna build those relationships, you wanna walk into those branches, get to know that business banker contact. Because there might be a resource that can help, you. Maybe not now, but maybe in 3 or 4 years. So you definitely want to start building that relationship. But you don't have to be tied to your bank. So I understand all their fee structures that they have. Right, there was banks that charge, some banks charge you if you don't use your debit card, right? I don't use my money, you're charging me like it. So you wanna understand like what are these, ask the questions, right, and see what works for you. And you never know, they might be able to waive fees, right, depending on those conversations.
Yeah, if you're like the long time customer and try to work with me.
Yeah.
So. I know Bank of America right now, you put zero, so I you open your account.
Yeah. And sometimes I'm not like that to begin. Yeah, exactly. And see what the terms are. Sometimes they won't charge you any fees until your business has hit a certain amount of transactions or until 18 months have passed in your business. So these are things that keep in mind. So maybe you have them and then you change them later. So now the next part we're gonna go over is systematic. Okay, we're good on time. So we're gonna go over systems, right? So there's different bookkeeping systems out there. There's Zero, there's Wave. Wave is they do operate free versions. So if you don't have a lot of activity in your business, go free. We're gonna have QuickBooks right now and a QuickBooks partner, but you have to be mindful of how you're spending your money in your business. Right, so maybe right now it's using a free platform. There's also FreshBooks, which I think they have a premium model, so they start at a low price and it goes up based on use. And then we have QuickBooks, which we'll do a walkthrough today. Now, for me, why QuickBooks, as I mentioned, I'm certified QuickBooks Pro Advisor. I think it is built for businesses at all different sizes. They help you track your income, expenses, your profits. One thing I really like is that if you are a business that requires projects, so you're a cleaning company, you are a designer, an architect, you do construction, just an example, but anything where you need a project, there is a version of QuickBooks where it can track your profitability by project. So you know, hey, is this contract making me money? And again, you don't need, then you can analyze that and say, oh, I just had a similar contract and my profitability here was 10%. I really want it to be 15%. So what can I do? I can lower my costs by finding the vendors, or I raise my costs, right? So again, that analysis.
The project one is enterprise or premium?
It's the plus. I think I plus this one.
That's what I'm saying.
The plus version. This one. Enterprise is if you have multiple companies underneath you. You can get enterprise, yeah. But we'll walk through, the walkthrough that I'm gonna show is the one that shows the project. So before we dive into the tool, I'm just gonna go over a few pieces of content, and that way we just wrap up with being in the system. So this event is being sponsored by current veterans, so Intuit doesn't have special pricing on their subscription for QuickBooks, but they do have other military programs and veteran initiatives. So I have the link there, just intuit.com/military. So if that, if that provides by you or your spouse, feel free to take a look at those resources that they have. Now, what are some steps to implement QuickBooks? And most likely the other platforms will be similar steps and if you decide to work differently. The first step is enroll, right? Taking to see which one meets your needs. I've connected with clients who they're paying for enterprise QuickBooks, but they don't need that. They need Simple Start. Right, so their cost is extremely high, unnecessarily. They don't actually need all of those features. So really take a moment to look through all the features. I just had a new client start. I mentioned I'm a QuickBooks partner. My pricing doesn't include the first level of QuickBooks. So I always take a look and I'm like, don't use my link. Well, let's set your pricing from the QuickBooks main page because this first level 1 feature, that's okay for your business right now. So I think that's very important, making sure that you're seeing what's included in the technology and does it make sense. Again, as I mentioned, last year I took a deep dive into my tech stack or the technology I use in my business. How many times do you get software and systems because someone else said this will be great, and you buy and you buy and you buy, and then you realize that 3 of the systems basically do the same thing. And you're using 2 features here and 1 feature there, but you can save money by saying, actually, I'm gonna close this. And I'm gonna just use all the features available to in system paying. Right, so start to ask yourself that question. I think as entrepreneurs, we invest a lot in our development, but there are programs like this that you can come and attend that don't cost you anything. It's you investing your time. Right, so again, think about these things as you're going through your business. The next part is setting up. So when you're setting up QuickBooks, if you're just starting out, if you're not an S corporation, maybe you're only an LLC, raise your hand actually if your business is registered. Okay, now raise your hand if you're an LLC. Only. Okay, if you're an S corporation. If you're an S corp, do you have payroll?
Right, yeah.
Not yet, okay, you're required to have payroll.
Well,
But you're required, it's required. Okay, just saying. So you wanna make sure that you set up your bookkeeping properly. If you're doing QuickBooks, I always say, choose the S corp. You can change it later once your account opens, but what happens is when you create the account, it generates your chart of accounts, which we're gonna walk through in a minute. So generate the one that eventually, as your business grows, you might reach that threshold versus now you have a low, a smaller list of accounts, but it might not serve you depending on how long your business is. So set up. The next process is connecting. You can actually connect your bank accounts, your credit card accounts to the tool. And what does this mean? This means that you don't have to go, as that example I gave of printing out your bank statement, highlighting your expenses. They will actually all feed right into the system, and all you need to do, or your account can do, is classify those transactions for you. You want to review those transactions. You want to schedule a money date with yourself and or with your accountant. No one should have the power to just manage your money and you're just blind to it. You need to know what's going on. Ask the questions, right? And if you're shopping around for an account, ask them, how much access to you do I have? Can I call you? Will you walk me through my numbers, right? Think about these things. You're making those decisions. And then lastly, we'll start categorizing. Then we're gonna dive into what analysis looks like. So we already talked about what the 3 main reports are, what's on them, what do they kind of look like, familiarize ourselves with them. Now we're gonna say, well, what can each report tell us, right? That analysis part. So your profit and loss. This is going to show you revenue trends. Which income streams are growing or declining. That's why in the spreadsheet I shared, I did it by month. So you can look at what that trend is showing in your business. Maybe it's time that you stop putting so much energy in one of your services because it's not bringing you as much money as your other service. Or stop making a product, vice versa. It's going to show you what are your expenses. Where's most of your money going? When we went through that cash flow strategy, I said, don't just go running and do these percentages. Because maybe your expenses are 70%, not 30%. 30% might be the goal, but maybe it's higher. So you want to start using this to analyze that. And again, profitability. I know a lot of you were mentioning profitability. This is going to show you, are you operating in a profit or a loss over time? Okay. The balance sheet. This is going to show you your cash position. How liquid is your business? Because on this balance sheet, we'll have all of your bank accounts and their current balances. So when you're bringing in your transactions and you're classifying them, the next step is to reconcile it to the bank. This means, again, looking at your bank statement. What does it say that you ended the month with? Looking at your bookkeeping system and saying, did it end with that? Okay, something's off. It should match, right? What are your debt levels? Are you over leveraged or financially stable? Over leverage means that you have too much debt. You're relying too much on the debt. I've seen businesses in South Florida where they took out debt. They were expecting a grant. They did not get that grant. And now they can't really afford their expenses because they have all this debt and they were relying on this other piece of income to pay for that debt and pay their expenses in their business. Now, I'm not here to tell you debt is bad. I'm saying we want to use it strategically. We want to be wise about it. You can actually leverage this things to scale your business because guess what doesn't get taxed? Debt. Other people's money. Right? Because you didn't work for it. But that doesn't mean I want you to go out and take out all the loans. if your business is not bringing in the money to cover it. Or to, max out all your credit cards. Because that has to get paid off. And sometimes when you take out debt, they ask you to personally guarantee it. That means that just because your business can't pay, you signed up that if your business can't pay, you can pay. So keep that in mind when if you're looking at that station. And then it also shows you your owner's equity. So what's the net worth of your business at time? So all of your net income and loss will be shown on there, and you contribute to this will be shown on there as well. And then we have our cash flow. Again, the cash flow, what is that report going to tell you? Can you meet your short-term obligation? Do you have enough liquid cash to pay things that are coming due in the short term? What's your operational efficiency? Are you generating a positive cash flow? Or are you spending all of your money? And you're showing up red. And again, timing gaps. Are you spending your money before you receive money? This is very similar. You've heard the terminology of your credit card float. Some people feel, oh, I pay off my credit card every month, but they always have a balance. It's because they're spending cash before they actually have it. So if that credit card were to disappear, they would not have enough cash to cover them in the meantime. So it's very similar. And now we're gonna go ahead and take a look at it. So any questions before we get into that?
Yeah, because you said, tell me if I'm wrong, because you said that when you open a business, right? And then an account, you wanted to have a separate, so just in case somebody sues you, they can sue you personally. For now, you said something about a loan, and if you take a loan, like a business loan, right?
Yeah.
When you sign, that means even though your business goes down the drain, you personally have to pay the loan.
So some loans, they will ask you to personally guarantee. So that means that they are going to look at your personal credit score.
Okay.
And then you're saying that if the business cannot pay, you will pay. You will personally pay. So some, again, when people are lending you money, they want to protect themselves because they put out that cash. So they might have a personal guarantee. So some people say, oh, just take a loan on your business. I know the competition of business credit is huge. Again, I'm not saying these tools are not useful, but sometimes the way that it's spoken about doesn't really give you the full picture. Do you want to be mine and ask those things? Other things to ask if you're taking out a loan or thinking of moving in that space is, what's the term of the loan? So how long do I have to pay? What's the interest rate of the loan? Is it fixed? Is it variable? Variable means that interest rate can change. Usually you don't see that on credit account. But also, is there a prepayment penalty? Anyone know what a prepayment penalty is?
Yeah, you're paying the
Bid
bill.
ahead of time.
Right. They
Analyze.
paid. Because they were expecting that you were gonna pay over 5 years and they were gonna make this much money. So you always wanna ask that question, is there a prepayment penalty? Because who knows, maybe you need a loan right now, but then, boom, your service hits. And now you have all this cash and what, I need this loan anymore, I can pay it off. So these are questions to ask. Let's go ahead and dive into it. So, go ahead.
If I tell you some quick book, do I put your little sheet that you were ready before or?
You wouldn't need to, because everything will flow right into your QuickBooks and then you can calculate it. It'll do all the math for you. You're gonna see it right now, how you can quickly generate reports. But that's, if you, again, are not revenue generating right now, you don't have a lot of movements. Maybe investing in a platform that you can pay a subscription for isn't really the best use of your cash. So I want to give that option in the case that that's where you are at this. Actually, before I click, you can scan this QR code and that way you can play around in the sample account as well if you have your computers. Any questions while the page loads? It could be where your business feel comfortable.
How much would it be? The rates to get your services.
So my rates really depend on the level of movement that you have in your business. The first thing I always do is an assessment, which is really me going in, assessing what your current books look like. That does start at 1,000 for that assessment, and then I credit 60% of that towards any cleanup, right? Making sure that your books are clean and in order. But I'm very step by step. So just because you do an assessment with me doesn't mean I have to do your cleanup. But if you come back, 6 months later and now you want to do it, I'm gonna have to assess again because now it's been 6 months. So but definitely let me know and we'll put FIU and I'll work something like that. Yes. Any other questions? Maybe still going.
You also pay taxes.
Yeah, so I have a CPA on my team that specializes on the tax piece, and I'm a CPA, but I specialize on the financial statement side. And we do tax planning, file taxes as well. Tax for our bookkeeping client, and then tax planning, you do that at home. And then you came a little later, so one thing I touched on was that tax preparation, which is, March through April, is different than tax planning. That's filing, reporting what has happened in the previous year, planning is saying, okay, how can I think strategically moving forward? Now you're talking about, all right, then it's time for me to reduce my tax liability because I'm going to contribute to retirement for myself. I'm gonna put myself on payroll. It's looking at your whole household. Maybe you have a spouse that's working. So it's different strategies that you can use, of course, within the, within the law and within the code of the tax code that are out there for you to better prepare yourself for that tax filing. Oh, I think the laptop is dying. Okay. So I'll have a little walkthrough if you have your laptop because we are already in the pool. So basically, as I mentioned, what QuickBooks does, it allows you to connect all of your banks into the tool, and your transactions will feed into the tool. Something else that will come in those transactions is your bank statements depending. Certain banks, they don't have that sync yet, so you have to actually go to your bank, grab your bank statements. Other banks have already feed in, so you can do your bank reconciliation. Now, when you get to that transaction window, it will show all of your accounts separately. And this is why it's important in that setup phase to connect all of your credit accounts related to everything for the business. Oh, here we are. Everything related to the business will come in. And then also your bank accounts and your savings accounts for the business. Nothing personal should be connected because it could get messy. But you can bring in manual transactions if you need to. Now, I mentioned a lot about separating business and personal. Of course, when you first start your business, you might be using personal funds when you're kicking off. Maybe your business hasn't registered yet, so you can't open the bank account yet. So this doesn't mean that you can't mark those as expenses. Again, registering your business is not for tax purposes. You could still file as a business owner. You could still file your Schedule C and collect those business expenses, even if you are not registered as a business. So I do want to preface that. You just can't open the bank accounts. Okay. So when you first log in to QuickBooks, what you'll see is a dashboard. This dashboard, you can shift things around, move things around to best suit your needs and what you want to look at first. So here, I'll scroll down to this dashboard. So you can see the status of all your bank accounts. If you have any transactions that you want, it'll show you what your profit is for the month. You can also see your cash flow, your expenses. And again, these modules can be rearranged based on your preference and on your interests. Now, when you link your accounts, it's going to ask you in the setup window to link your accounts when you're setting it up. It uses a platform like Plaid, so you would log in. Depending, you can enter your credentials to log in. Chase, I know now has a new feature where you scan the QR code and it opens your app. But if your app is in your personal account, then just do the manual login. You can also come in here to manually link your accounts. So what does this show? Here, it will show what is the balance at your bank at the top. It might look a bit different if you're in the owner's view versus the accountant view. And on the bottom, it'll show you what's in QuickBooks. Now, the reason why there might be differences here is A, maybe you didn't set your starting balances right when you first created your QuickBooks. And also, there's still transactions that need to be classified. So the goal is when you categorize all of your transactions, you'll have a green check and these amounts will equal each other. Now, that doesn't mean you've done a reconciliation. This just means that the transactions came in appropriately. The system is also very intuitive, so it matches. So if you have, let's say you have your credit card account and you have that business checking account in the one space, it will say, oh, we mapped this. We saw that money left account A and went to account B on the same date for the same amount. They match. You can click it to learn more. So for example, here, there were 2 matches found. So when that happens, you'd want to, I'm not going to click into it just so the page doesn't get stuck just in case. But you can click into it, see which one makes sense, like what's the right date, what's the right detail. Because again, it's technology. Technology makes errors. And you would match it. It will also match your invoicing because you can invoice through QuickBooks. So if you have invoices that are coming in, going out in the tool, a payment comes in, it'll say, oh, we saw the money that came in.
We found the invoice and we've matched it, and it'll mark that invoice as paid. Any questions on this part? Now, reconciliation. So this again is the process of making sure that all of the transactions that your bank has recognized are also in QuickBooks. And you might be wondering, well, if it's syncing, why don't the transactions come in? So it could be that the connection broke. Not everything came in and you didn't realize it got reconnected. That does happen. You'll see a error that says, please reconnect your account. It could be just the fact that there was a lag. So your statement, QuickBooks is showing that a payment went out on the 31st, but that payment is actually going to show up in the next month's statement because it didn't process yet at the bank. So it's really kind of this check. This can also show if money came in that you weren't expecting, or I had a client who they didn't realize that they paid their credit card from their personal account. And so when I went in and said, hey, I don't see this transaction coming out of any of your business accounts, they were to dive in and realize, oh, they actually paid out of from their personal account. And then they had to decide, okay, am I going to mark this as a contribution to this business, or do I want to pay myself back that money, right? And distribute that money from your business. But the main thing of it all is your chart of accounts. This, when you saw that balance sheet and the profit and loss, and I'm going to show you an example now, it had a bunch of accounts on it, right? Service 1, service 2, auto expense, utilities, etc. It's all coming from your chart of accounts. So you can't categorize anything if your chart of accounts is not set up, because then where are you going to categorize that money to? So again, this is why I say if you're setting up QuickBooks, put S Corp as the option so you can get a full chart of accounts for S Corps, and then you go into your settings later and you say, oh, I'm an LLC, and you change it. But at least now at the setup moment, you're able to grab those accounts. If you already have that, you can always adjust this. Go ahead.
Just have a question. Okay, so then if they have a credit card, that's the business credit card.
Yeah.
Right? And you pay it automatically, and then you also want to reconcile your credit card. But like, you don't want every entry, let's say, like, used for meals, right?
Okay.
And you do, like, every month you do a picnic for the max, right?
Yeah.
So I don't want all those details. I just wanna do one category, like meals, and then how do I do that if I reconcile your credit card and to write down my goal and income?
Yeah, so the account will be meals. That'll be the account. And when you categorize that transaction or that spend, you would just put everything will be categorized to meals. You can also organize when you're categorizing your transactions, is you can sort this, right? Like you see how all the rental is together. Then you can click all 3 of them at one time and categorize them all at one time.
That works also on the desktop, because I have desktop.
Yes, it should work on the desktop. But I just know that they are phasing out QuickBooks Desktop. So eventually you will be online. But it'll help you because your accountant doesn't have to go to your house to access QuickBooks. You can actually give them access. So I can access my client's QuickBooks through my account as an accountant. I don't need their password or to see them in person, and I can log in on the back end and categorize and do everything for them.
I put this stuff.
Yeah. Fair warning. I don't know when that's gonna happen, but I know that they're slowly phasing that out. But then you could still reconcile those transactions. Now you mentioned something with meals. Be very mindful of meals. Also know that not 100% of the meals are deductible.
So how do you know when to do that, to get it deducted?
Well-
Well, say if you go into an event, you have to eat at that event.
Right, but for tax purposes, it's not 100%. So it's 50%.
It's on.
So that's why your numbers on your tax return, there's a schedule on your tax return that will show the difference between the book, which is your books, versus the tax, because not everything is 100% deductible. But for meals, you think you want to know, you can be deducting every meal. You need to know, okay, who's there, what was discussed, what was the business happening, you want to have known. Anything over $75, you want to keep the receipt. You can link your receipts, your transactions here. This is important because if you get audited, you're like, oh, well, I have all the bank statements. The IRS is gonna be like, that doesn't mean nothing. They want the receipt. So make sure you're saving receipts for anything above $75 that you're spending on this. Oh, I do want to. I'm an auditor, so I'm like not an IRS auditor, but I like to make sure you're also audit ready.
Electronic receipt, okay.
Yeah, as long as you have the receipts. right? And then if you're using a tool like this, you can actually upload or attach images. So something I like to attach is if my clients are signing contracts with anyone, I attach that contract to the customer profile. Any of those bills, I have a client portal where I say, hey, you need a receipt, the client uploads the receipt, I tag it right into their QuickBooks transaction. Because it's better to just be ready so that you don't have to go scrambling later looking for something that was from 2 years ago. And if you weren't doing it before, this is a new day. You just start now. Now, I do want to walk through and be mindful of time is the reporting and the projects. So based on the level of QuickBooks that you have, you might not have all of these options. For example, like the budgeting and forecasting or the projects. So it just depends on your level of QuickBooks. Now, this open the regular one for me. I'm gonna change that. Okay, so it's not giving me the project screen. Let's see if it got hidden. Okay, it's not showing me the projects on this link, but I'll walk through some reports for you in the meantime. The projects basically allows you to, again, attach any invoices and any expenses to a specific customer and or project for that customer, and then it'll show you, okay, you're 10% profitable, 20% profitable, because you're already tagging everything to that specific customer. Now, with the reporting tool, I mentioned earlier, there are free bookkeeping softwares. They might not give you all of the reports, but they'll for sure at least give you balance sheet and profit and loss. Be very mindful. I know there's like AI bookkeeping softwares and different things like that. Again, always find out about the fees. I had a client who had an AI bookkeeping software. Now they're working with me because they found out to get their P&L, they were going to get charged $500 to get their balance sheet. So it was low cost and low entry and self-done. But then when they needed the things that they needed, that's where they hit them with the fees. So again, always be mindful of fees. Ask questions. No question is a bad question. So we talked about that spreadsheet, right? You're manually getting your reports, you're highlighting things, you're plugging them into the template. Here, all you have to do is click reports, figure out what day you want. Maybe you want last quarter, right? So if I go here to last quarter, the dates automatically update. Many of you are probably cash basis, and then boom, you get to see your reports. You can also break this down by month as well. So you can say, okay, again, this is my favorite view. I think gives you a good basis point for analyzing. Now I'm changing it to by month, run the report. Now it's split things up by month. Now I have the visibility to see, okay, what's going on here? Okay, I've spent 400 in April and in May, but not in March and in February. Why not? Do I not have these types of projects? You can start asking those questions. Okay, pest control services, I paid $70 and then it was negative $65. Oh, why did that happen? You can then click into this and it'll run another report that shows you all the transactions that gave that number, that total number. So it really gives you the ability to click around and dive in. And it's the difference between using a system versus manually doing things. If you're doing manual, you'll have to go back to your spreadsheet or go back to your notes, kind of filter things out, maybe do some math. Where systems, it's just by a click of a button, you could dive in deeper and really get a good understanding. Something else that's good to do is that you can compare. So maybe you're saying, and this is a sample account, so I'm going to see if they have a historical period. But let's say I want to see, well, how did I do compared to the previous year? Dollar change or percentage change? Might not show anything. And I want to display totals only. So I'm gonna do a month just so that you can see kind of the functionality. And then previous period will just show me the previous month. So now I can say, okay, this is how my business has changed period over period, and it'll do the math for you. So this month compared to last month increased by this amount, by this percentage, et cetera. So you can start to see, well, what happened? And start asking yourself this question. Oh, well, last month I made more money. I went to 6 other events. I networked with more people. I contacted more leads. And then you can say, well, how can I do that this month? So increase my revenue. So having your eyes on your number, reading the money story, you're going to start to naturally over time start thinking about these things. Well, what did I do last month that was different that I'm not doing this month? How can I reassess? In my business, as you know, doing the money coaching that I do, a lot of my accounting fees comes from referrals, comes from these workshops. A lot of my other events and program comes through Instagram, right? So one time I saw revenue was going down, what happened? Well, I didn't go live. I was able to correlate that when I go live on my Instagram, I make more money on that side of the business because people are seeing my face more often. If I wasn't looking at this detail and taking the moment to think, I would never have been able to correlate the two, right? So it's going to help you when you start doing those things. Other items that are pretty cool is that there's a report by vendor list. So you can organize your vendors based on spend. So what does this do? This allows you to look at where you're spending most of your money by vendor. And if you're a business that's buying a lot of products, let's say you're in the maintenance business and you're buying a lot of cleaning products at the same store, and you can say, oh, well, last quarter, I spent $10,000 with you guys. Is there any way we could, they might not want to lose $10,000 on the business. So now you can start to negotiate. Well, can we get better pricing? If I spend over this month, over this amount, can I get a special pricing as, a vendor that a preferred vendor, et cetera. So these are things you can start having conversations now to think strategically, not how to increase your prices, but how can now you can lower costs. And then for timing purposes, I think I'll leave it here. You guys do have the links, so you can play around with the tool. We're back on the presentation. Now, going on to pricing, as I mentioned, if you scan this QR code, this is my partner link with QuickBooks. So there is different pricing. You get to save 30% off for the first year instead of for the first 3 months, which is their usual price point. But again, also compare this link to the QuickBooks system, because if you are just on level 1, like that lower tier QuickBooks, Simple Start, you're not going to see this on my QR code. Right? They only give me access to these other levels. So if you're at Simple Start, again, they'll show you in bold what the different requirements are, then start here. So I am sharing you my link, but I'm also here to aim for you to save your funds, save your coins, and use your money wisely. So I do want to highlight that. And thank you for attending. So my mission is really to help money be less scary, make it easy to understand. So let's talk wealth, not worry when it comes to our finances. If you scan this QR code, I have a resource toolkit for you. It has a bunch of different tools that I've used in my business and other resources. It's going to bring you to a page. You have to enter your name and email, hit submit, and then you'll get an email. Give it about 35 minutes or so. Check your spam if you don't see it, with a spreadsheet with a ton of links and resources for you. And there's also going to be a pop-up if you would like to book a complimentary call. You can do that. And that's all.